Hi, and welcome to Best in Tesla. So, Tesla just held their earnings call for Q4 and full year 2022. And to no one's surprise, Tesla had records all around. Best quarter ever and best year ever. And looking forward, we will only see this continue, and Tesla has some new things to share on how they will earn even more profits on their cars going forward. Tesla has only just begun, and all the doubt about profits and demand was put to rest. So let's check it all out and let's dive right in. So, Tesla's revenue was only up 51% in 2022, hitting $81.5 billion, up with $27.7 billion. So Tesla grew with more revenue than they made in all of 2019. Actually, they made about the same amount of revenue in just Q4 as they did in all of 2019. So, a busted growth story, right? As Tesla is only growing faster than any other large manufacturer in history and continues. Oh, is that it? And the free cash flow is something Wall Street analysts are always very focused on. Well, Tesla was also up 51% in free cash flow to $7.5 billion for 2022, adding another $1.1 billion to their bank account. That is now up to $22.2 billion. And the bottom line, net income, well, it was up 128%. to $12.6 billion. So, as I guessed in my video about Tesla's net income for 2022 in my video after Q2 earnings call, I said I believe Tesla would end the year off between $12 to $13 billion in net income, and they made $12.6 billion, so that turned out to be quite precise. So let's see if GM ends the year as I predicted as well, with net income between $9 to $10 billion. Yes, Tesla is doing better financially than the car company that is selling almost 5 times the amount of units. But Tesla is in trouble. No, it is not Tesla that are in trouble. And when it comes to the future growth, Tesla also wrote in their earnings report that they expect to remain ahead of the long-term 50% compound annual growth rate with around 1.8 million cars for 2023. So this year we actually get an actual number, so Wall Street analyst knows what to focus on. And I would still say these numbers are sandbagging, but we will see how this all play out. But Tesla once again tried to show what 50% compound annual growth rate means, so Wall Street and the mainstream media have a chance to understand it. As they clearly showed us in 2022, they didn't understand it. It does not mean that every year will grow 50%. It means it will on average grow 50%, some years higher, some years lower. So as they stated in the beginning of 2021, they expect to have a compound annual growth rate of 50% going forward. Here, Tesla has made a little chart showing exactly how that looks. So far, they are ahead of the prediction, not behind, as many people would like you to think. Tesla missed. No, they didn't miss anything. So far, they have an average growth rate in deliveries about 63.5% from when they made that statement in 2021, so above 50%. and showing us that 2023, just below 1.7 million, would be the average growth rate of 50% since 2020, but they are aiming for 1.8 million. But internally, as Elon said in the earnings call, they are closer to 2 million in production run rate, but they are not willing to commit to that. As he said, there's always something force majeure happening around the world, but they have the potential for 2 million in 2023. I still think that is still sandbagging the numbers quite a bit. But overall, Tesla's finance looks very, very strong, stronger than ever. And for the first time I can recall, Tesla's stock actually went up after hours, after a Tesla earnings call, with records all around. It usually goes down. So maybe even Wall Street got the message this time around. Yes, Tesla stock was down in 2022, but Tesla just wrapped its best year ever. And the S&P 500 just wrapped its worst year since the 2008 crisis, and Bank of America is warning that it could flatline this year. Flatline. That's not good. But my long-term partner, Masterworks, has already been helping over 600,000 people see real results, including many of you. They paid out over $25 million just in the last 12 months alone, including 3 sales just in the last 60 days, which returned 10, 13 and 35% net. No wonder Masterworks has been featured in financial publications such as Business Insider and Financial Times, and even awarded one of LinkedIn's top 50 startups. Masterworks doesn't do NFTs or cryptos. They invest in real physical paintings qualified with the SEC. Masterworks filed over 200 offerings with the SEC, ranking from $500,000 to $25 million. I will also link to their SEC page in the description so you can check that out yourself. But Masterworks is the modern solution to diversify your investment. If a recession is coming here in 2023 and the tech stock is going to be even harder hit this year, it would probably be a good idea to have some investment that you can get some short-term gains on, while we long-term investors for Tesla wait for the Tesla stock to get back up to new all-time highs. So for special access to Masterworks, click the link down below, and a big thanks to Masterworks for sponsoring this video. And if we look at Tesla's storage business, they are growing even faster than their automotive business, as Elon said it would. Fancy that. Storage grew 152% in Q4, so on track for the 150% growth that Elon said they were expecting their energy business to grow with. So Tesla deployed more energy storage in Q4 than Tesla did in all of 2019. And now Tesla will ramp up the Lathrop Megapack factory to grow even faster. But in the car market, not the EV market, but the overall car market, Tesla continues to gain market share, both in Europe, US and China, as we can see on this little chart here, showing Tesla only going up, gaining more and more market share in the overall car market. And Tesla also answered some questions about the Cybertruck and the 4680 cell production. As they said, their 2023 4680 cell goal is to cost-effectively ramp up 4680 cell production ahead of the Cybertruck. And the Cybertruck will have their hardware 4, but also said hardware 4 is not needed for full self-driving to become safer than a human. But Cybertruck is still on track to start production mid-2023, but high volume, which is the most important thing, as Elon pointed out, Tesla will not hit before 2024. Just as we saw with the Berlin and Texas factory, that they started production in April and May in 2022, but will only really hit high volume in 2023 and actually start helping Tesla's financials. But I just want to see that monster in the hands of customers out on the street. So I will take the start of production as a good thing this year, no matter what the production numbers will be. As Elon also said at the earnings call, Cybertruck is something special that only comes along once in a while. Yep, can't wait to see this beast in action. And people have been screaming about demand problem for the last 3 months of 2022 when it comes to Tesla, not understanding how many levers Tesla has they can pull if they need more demand. Price cut was only one out of a dozen. And Tesla was, of course, asked about that on the earnings call, and Elon replied, demand is the strongest year to date ever. They have twice the amount of orders coming in than they have production. So demand is strong, stronger than ever. Let's just repeat that once again, so everyone hopefully soon will start getting this. Demand is strong, stronger than ever. Okay, then we don't really have to need to discuss that anymore, do we? Demand is strong, stronger than it has ever been. But the price cut will hurt Tesla and their margin will collapse and Tesla will stop earning money, and with the recession coming they need those margins. Well, good for all the people that don't get it. Tesla answered all these questions. Firstly, even though Tesla's average selling price has dropped, it actually dropped about 8.3% in Q4 compared to Q2. So over the last 6 months of 2022, Tesla's average selling price dropped 8.3%, but their gross margin only dropped 2%. Tesla in Q4 still had 26% automotive gross margin. But as we also can see on this chart, Tesla's operating margins versus a vehicle average selling price, operating margin is growing rapidly. But nothing to see here, just move along. Not a very important matrix for a company that is growing rapidly, that also at the same time grow its operating margins, while building new factories and ramping up production and still killing it. The others would kill for an operating margin like that. And Tesla was asked about where Tesla sees their margin going forward, as people was afraid their margin would drop below the 20% margin. But Tesla answered the question that their gross margin would stay above the 20% gross margin that was asked in the question. Just as I talked about in my video about Tesla's price cut, I don't see Tesla getting under 20% gross margin even with the price cut, because of all the good stuff Tesla has going for them in 2023. And one of the things was what Elon also pointed out once again, that all the cars that they sell have the potential to buy software upgrades for $15,000, and in the US to get access to the full self-driving beta program after they have sold the car. And the Tesla full self-driving beta program is improving rapidly right now, and Tesla now have over 400,000 beta testers who are all the Tesla owners that have actually bought the full self-driving software in the US. So that was really good to know. So we can from here on out expect that every new beta tester we see on this chart has paid Tesla $15,000 after they bought their car, or it is a new Tesla owner that have bought it with the car. And Tesla also expect the average selling price of the vehicle to continue to be above the $40,000 that was asked in the question. And Tesla also talked about the cost of goods for Tesla going down. But as Elon also mentioned, a recession will actually decrease the cost of goods even further. So that will only mean more money for Tesla. And speaking of the recession, Elon also mentioned that Tesla is probably the company that is best positioned going into a recession, as Tesla has pretty much no debt and has $22.2 billion in the bank. So Tesla is in a great position for a recession. As Elon said, in a recession, cash is king. And Tesla has a shit ton of cash and no debt. And the cost of goods going down means that Tesla can reduce the price even more if they have to during a recession, as their margin will only grow. But Tesla also talked about things we have not heard about before that can help their margins even further. As Tesla told us about their fleet is now maturing, and they're gathering a lot of data about the fleet on how they can bring in some more margins they didn't know about. One example, so they probably have more than one example, but one example was the overkill on their powertrains, which they can reduce the cost of the powertrain without losing efficiency or power. It was simply just over-engineered with Tesla's big brains. So another thing no one of us knew about, but of course Tesla knew what was coming. To make even more money for Tesla, or to make Tesla able to lower their price and still get great margins, so leave it to Tesla. They know what they're doing. While everyone else in the industry don't have a powerful and efficient powertrain and is losing money on it. This must just be so devastating for the old OEMs to hear Tesla has found even more ways to make more margin, while Tesla is already industry leading on margin, not just on EVs, but all cars, and the old guys are losing money on their EVs. Yeah, Tesla is just so far ahead. As Elon said at the earnings call about Tesla's full self-driving software, number 2 needs a telescope to see Tesla. But that is pretty much on any number. If you ask me, they need a telescope, not just full self-driving. And the same thing goes for Tesla's AI and robots that no one is really counting in as of now. But that will be the biggest catalyst for Tesla, or any other company in history for that matter. But as it is not really earning Tesla anything yet, let's just leave that for now. So to recap, best year ever for Tesla, Q4 best quarter for Tesla ever, and the demand is stronger than ever. Margins will stay above 20%, whatever that means, but no need to worry about Tesla's profits. And we have a lot of great stuff to look forward to in 2023, starting with Tesla's Investor Day on March the 1st, where Tesla will talk more about their future products. So that is very exciting. As Elon said, we have the most exciting roadmap ahead of us than any other company on the planet. So that is going to be very, very, very exciting. So yes, Tesla is literally only just getting started, and their growth story continues.
And thank you for watching. And until next time, take care out there and be nice.